Hey, it's Rocky Chap Scott here, and in this video I'm going to show you an example of the kind of technical analysis we cover in this training. Now, first of all, I have to give you a risk warning and a disclaimer. This video is for information only. I'm not a licensed advisor. I can't give you trading advice or any kind of advice regarding your finances. What this is about is technical analysis of markets, and if you take trades or not based on this, that's completely up to you. It does not contain investment advice. That's what I'd like to say to you. So with that understood, let's take a look at some analysis I did earlier this month, and then once that's over, I'll give you an update of what's happened up to today. Hey, it's Rocky here, and as you can see, today is the 30th of June, last day of the financial year here in Australia, and this is the Australian ASX200 stock index. This is a daily chart, and this is a 15-minute chart, and the market's trading right now. You can see we've got 204.23. So this is live right now as the market's just opening. It's just on 10 o'clock. So you can see the market's trading. This is live. And as I said, it's the 30th of June 2016. So I wanted to give you some analysis of why I was happy to buy this market. You'll see the little buy signal down there, that little arrow, and what I think is going to happen next. Let's go to this daily chart first, and I'll give you the timing reasons and the price reasons why I thought we'd made a low here and I was happy to buy it. Looking back, this is our big low back here in February 11. Market rallied up here nicely. And in the last video, I was talking about how I'd taken the range from this low to this high and projected it from here. And this high was exactly 100% of the previous range, of this range here. So we'd done 100% of the range, and then we'd had 3 days down at the time. And my thoughts were that this was over, this leg, and we were going to have a significant correction. And as it turned out, that's what happened. We came down here to just north of 50% retracement here, and then we started to rally. This was the last day before the UK voted whether they were going to stay in or out of the EU, and we closed on a high at just over a 618 retracement of this leg down. Of course, overnight we got the news that they were going to potentially leave the EU, and the market started to sell off here, and down we came all day that day. US was down heavily overnight that night, and then we traded all the way down to here, which, as you can see on this chart, is again between 50% retracement and 618 retracement. So it's gone down pretty much in the center of that. The other price reason that this stopped here was I took this range from the high to the low and then projected it from here, and we came out to 100% of the range is 5,017, and the low was just above that. So there were two strong indications there that price had gone far enough, at least for this leg. Another reason I was happy to look at going long here was this is our low here. You'll see the RSI down the bottom, and I don't talk about RSI much, but I do use it occasionally. The RSI, we made a low here below 70, and then on this lower low we made a high low on the RSI. So we've got a downtrend here and an uptrend here. That's a divergence, and that's something to take note of. Of course, this day here it had only just started to turn, but then once it confirmed it was going higher, up we went on the RSI and up we went on the price. Now, the reason I was looking for a low down here was if we look at this high, that was on the 27th of May, and this low was on the 27th of June. So that's 30 days, 30 degrees from high to low. And this index quite often trades in 30-day segments. So with all of these things going on, it looked like it was time to buy this index. And just as an aside, you can see we're trading over here. It's live trading. It's 10:04 in the morning on the 30th of June. And the market's actually live here. So I just wanted to show you that this is actually live trading right now. So I haven't photoshopped this in or anything like that. This really is live. So we had this 50% 618 retracement, 100% of this range projected was 100% down here, and the RSI and the time. So that's what I call a setup. You have to strongly consider taking a position when you get a setup like that. Let's go to the quarter hour chart, and I'll show you the entry, and we'll look at where it's going now. So this is the Brexit move. We closed there, and then we just collapsed all the way down into this low here. Had a rally which was very close to 50%. There's that 50% again. And then we came down here, and this was a very strong move. This was a much shallower move. So just looking at the momentum, markets don't move this quickly for very long. Came back, a nice ABC correction. Then we had this beautiful descending wave down here. And again, as you can see on this quarter hour chart, we had a low here. RSI was very weak down in here. Then we had a lower low and a higher low here. So we've got again a divergence on the daily chart and on the quarter hour chart. This is something you don't want to ignore. So as the market rallied, Just zoom out so you can see this. There's our low there. We had a bullish engulfing candle there. Quite often you'll see them at lows, but you need to have all of these other factors as well. You can't just see a bullish engulfing pattern and buy it, because you don't know if that's the low. But when you've got the 50% 618 retracement, the 100% of the previous range on the daily chart, the time cycle, all of these things, you start to build a case for maybe this is a low. So out of this bullish engulfing pattern, we came up here, 2 bars, then we went down 1, 2, 3, 4. So it was 200% in time, but it was 50% in price. See that? It came down 50% of the rally over 4 bars. That's showing strength. So all of these things go together to give you the ability to forecast what's very likely to happen. Gann always said, if you have a higher high followed by a higher low, you've got an uptrend. So we made a higher swing high than all of these here. We've got 1, 2, 3 swing highs there. Higher swing high, very quickly. Higher low than this low. As soon as it started to rally, I bought it there, and that's my little buy signal there. And as you can see, we've just rallied all the way up here. Bit of a lower low there, but it continued to rally. We're up overnight, and here we are at 5208. So my entry here was at around 50.60. We're currently at 52.10, and this is looking very nice. So I hope that shows you again how you can look at this market and determine what is likely to happen. Hey, it's Rocky here again with a follow-up to the video you just watched. And today, as you can see, is the 15th of July 2016. And in the previous video, you saw how I bought the market down here based on all of the technical analysis we went through in that video. And this is what's happened since. And I just wanted to show you, run you through this so you can see how you can use technical analysis and time and price to forecast what may happen in the future. And you can do really well. Now, does it work all the time? Of course not. And nothing works all the time. So again, this is the Australian ASX200 cash index. This is the daily chart. This is the 15-minute chart. And looking at the big picture first, we entered down here, and then the market rallied. It came back up, made a higher low here, and as we discuss in other videos in this series, 50% retracement. If the trend is going to continue, a 50% retracement is very typical. 50% to 618 retracement. So the market rallied up, it came back down here 50%, very close to exactly 50%. Then it had this chart signal here, which is typical of a low, and it rallied, and then off we went on another leg. So that's how you can use 50% retracements or 618 retracements to trade out of a low. If you're trying to find the low in a retracement, you can quite often use that very well. So once this leg was complete and we'd come down and we'd started to rally again, I took this range from this low to this high and projected it from this low, and then there was our 100% of the previous range right there. And as we discuss in the training, it's a good idea to take at least some of the position off once you get to 100% of the previous range. So once it got up towards here, I was looking for a place to exit this trade, and to do that I came down to the 15-minute chart. And looking at the last 2 legs up of the 15-minute chart, this was the second last rally, and as you'll learn in the training, this is clearly an impulse wave where it's got big swings and it's moving quickly in one direction. And this is obviously a counter trend where it's got overlapping swings and it came down. Again, we came down here just above 50% retracement, and then we started to rally. So once it started to rally, I took the range from this low to this high and projected it from here, and we came out again to 100% of the previous range. And the other important thing to note here is there is a clear Elliott wave pattern. We've got wave 1, 2, 3, 4, 5. So we've come up to just over 100% of the previous range here on the big picture, and then we've come up to 100% of the range here on a shorter term time frame, and we've done a completed 5-wave sequence up. That to me said this market is over. So once it started to break down here, I put my stop loss order here, and I was taken out of the entire position. So now I'm flat, and we're just going to wait to see where the market goes. Today is also the 15th of July, which has in the past, 15th to the 17th of July, has been a major turn date in the Australian market. So you've just got to keep an eye out for that. So all of these things come together to give you what can turn out to be a very clear picture of how to trade a market. Do you have to trade the Australian 200 index? No, you don't. But go back and look at the charts you analyse and start looking for these legs. So even if you don't become a member of this trading program, I hope this small introduction gives you an idea of what you can achieve if you understand technical analysis, retracements, how ranges repeat, and the other important factors of analysing a market. So I hope you found this video helpful. And if you join us, that'd be great. I'd love to help you even further. If you don't join us, that's fine too. And I wish you every success with your future trading.